Well, hello, Premium Hunters. It is Andrew, and I'm here with another episode of my weekly portfolio performance update. And this week is for week 18, which is April 28th through May 2nd. And if this is your first time to my channel, my name is Andrew, and I am an options trader. And this is the channel where I pull back the curtain to show you exactly what I do and exactly how I do it. I post these updates each Monday, each week, and it's typically on Monday to analyze my previous weeks of options trading. And I also post videos on general knowledge type of information about options trading, as well as step-by-step guide on how to execute different trade strategies. So if you're interested in following me on my trading journey, be sure to like, subscribe, and hit that bell notification. Just a quick disclaimer, as you can see on the screen, I'm not a licensed financial advisor, and the information provided on this YouTube channel is for educational purposes only and should not be considered financial advice. So now, why am I doing this? Well, if you're new to options trading, I want you to know that it's legitimate, and I'm giving you the ability to see real results from a real trader. I know there are a lot of fake gurus out there pushing strategies or pushing techniques that don't really work. My goal is to be totally transparent with my trades, which is why I do these each and every week to document my trades. And as you will see, if you keep on watching, I document the good with the bad, the good with the ugly. I've had some bad weeks during my trading and during the time that I've been making these videos, and I show all of that to you and I explain why certain things happen. And ultimately my goal is to show you that this is legitimate, that you can make money. It's not something that you can just do overnight. It is something that does have a bit of a steep learning curve, so you do have to take some time to learn the strategies. But once you learn them, and if you're dedicated and committed enough to learning about options trading, then you definitely can make money trading options over time. And my second goal is to build a community of people, like-minded people that enjoy this topic of trading options and the different aspects of trading options, the different strategies, the different ways of making money, setbacks that people have had, so that we can discuss them, talk through them, and learn together as a community. All right, with that said, let's go ahead and get into what to expect for this video. First, I'll cover all of my closed trades. I'll discuss the strategy. I'll talk about the goal for those trades. I'll show you the profits and losses that I had for those trades and do a performance analysis. And I'll let you know right off the bat, I don't have a lot of strategies to cover this week. It's been a pretty slow, light week, and I'll explain why that is. However, there is a new strategy that I've been toying with, experimenting with. It's something that I mentioned last week. It's a zero DTE strategy, and I'll get more into that strategy in this video. Additionally, I'll go over my overall performance for the week, and I'll compare that weekly total to previous weeks to show you how I've been tracking throughout the year. And then any insights that I have, I'll analyze those and share those with you. All right, now you see that I have just switched over into my tracking platform. This is the platform that I use to track all of my trades. Before I get into this, I do want to mention that if you are new to options trading, I do have a video on my channel called Demystifying Options. It covers some of the basics about calls and puts and some of the basic concepts that you need to understand in order to understand what I'm getting into in this video. So if you are new to options trading and you want to understand more about the basic concepts of options, definitely check out that video. So TraderSync is the platform I use to track all of my trades. I do want to recommend to anybody that's starting options trading, before you get started, make sure you're tracking your trades and make sure you understand what you need to do in order to be able to track your trades, because that's one of the big mistakes that I made in the beginning, is that I just started doing trades and I just started experimenting with trades, but I didn't take the time, I didn't take a step back and take the time to figure out, well, how am I going to track these trades and how am I going to analyze these results? I just wanted to jump into it and I just wanted to see results. Like most people, we want overnight success, so I skipped the part of figuring out how I'm going to know whether or not I am successful, and that was a big mistake. And it took me a while, but I went through and experimented with a bunch of different platforms, and I finally landed on TraderSync, which I think is the easiest by far platform to help track your trades. If it is something that you're interested in checking out, I do have an affiliate link in the description below, so please take a look at that, check it out. I would really appreciate it if you could use my link because I do get a little bit of compensation for that. It's nothing much, but it does help support the channel. But TraderSync, I love it. I wouldn't recommend it if I didn't think it was beneficial and helpful. So definitely check it out. Now, let's go ahead and get into this week's results. First, before we do that, we'll take a look at last week, where I stood last week, and that's what I have on the screen right now. As you can see that up and through last week, including not this week's results, but up into this week, which was actually last week. But this is through week 17, let's put it that way, and we can take a look at that just by looking at my custom tags. I have a tag for each week here, and so I have all of my weeks selected up and including week 17, but not 18, which is the week I'll be covering this week. So before this week, I had a total of $62,104, let's call it. That was a weekly total of $3,653, a weekly average. So if you take the 62,104, divide it by 17 weeks, you come up with $3,615 or $53. So that was my average up until this week that we're going to cover today. And just as a reminder, if we take a look at the reports, we can see the graph to show my performance over the year. Started out strong with some great results, and of course we had all this nonsense about tariffs and everybody in the market was panicking. You know, there's still a lot of anxiety out there about that, but that caused me to take some pretty big losses here. And if we take a look at my bar chart for the weekly results, we can see here that week 15 was my biggest loss of almost $19,000. The week prior to that, I had to take a loss of almost $4,900. And previous to week 14, my biggest loss was just $3,700. And I had been booking mostly profits throughout the year with some relatively small losses up until week 14. My largest profit for the year was week 5, where I profited over $13,000, $13,315. So with that said, I did go back into the green on week 16 and in week 17 as well. So let's go ahead and take a look at week 18 to see how I did. All right, as I said earlier, I don't have a lot of strategies to cover with you today. The first one I do have to cover is the weekly wheel. This is the profit that I made for the weekly wheel in week 18. And as you can see, it's $468.12. Those were in Google. All right, so I went ahead and jumped into one of my trades here for Google, one of my weekly wheel trades for Google. This was a level 2 call. The blue line up here represents the stock. As I was selling my puts for the initial phase of the weekly wheel, I was collecting my premium, selling my puts, and then at a certain point my puts went in the money, forcing me to buy the stock at $180 per share. So as you can see here, this is the purchase price. The blue line represents the purchase price, what I paid for the stock. then the 174.97 is my cost basis. So if you add up all of the premium that I collected selling puts on Google, and then the calls that I've been selling since I was assigned the stock, selling those calls against the stock and collecting that premium, you add up all of that premium and then subtract it from the 180, that gives you a cost basis of 174.97. So when I go to sell my calls, I have to be careful to sell these calls at a strike price above the 174.97, because if I sell them below that strike price and then the option ends up going in the money because the stock goes above the strike price of that call, I will then be forced to sell the stock at that strike price. And if that strike price is below my cost basis, I then immediately take a loss at that point. So that's the situation I'm in right now. And as you can see, the stock is trading at just over $160 per share, which is significantly below my cost basis for the stock. So for me to sell calls that's above that cost basis, I'm not taking a whole lot of premium on those calls. The further away the calls are from the actual price of the stock, the less you're going to be able to collect. And as you can see, we're pretty far away. So one thing that I do, rather than selling calls for pennies, what I'll do is I'll actually go a little further out in time. And that's what I did here. You can see that the expiration date of this call was actually May 9th. Usually these are weekly trades, but I'm not able to collect enough on these weekly trades in order to really make it worth my while. So I just go a little bit further out in time with the expiration so that I can collect a little more premium. The drawback to that is it takes longer for the trade to actually close out at my 50% profit target. So I was able to get this one closed out, and I did make, as we can see here, let me go ahead and close this, I did make $172.42, and I'll just continue doing that on these. Let me go back to the stock chart here. You know, my hope is as time goes on, what I want to see happen is the stock continue to increase in value towards my call and towards the cost basis of the stock that I own. As that happens, I will be able to collect more and more premium the closer and closer the stock gets to my cost basis. So, you know, I'm very anxious and excited to see that happen. Hopefully that will happen. You know, a lot of that's going to depend on what Trump does with his tariff policies and how those affect the markets and how the overall economy, of course, that's always looming and that's always a concern, is how is the overall economy going to fare over the Trump administration and how is that going to affect our stocks. But the situation is what it is. I can't really change it. All I can do is react to it. And where I am right now, this is the strategy that I'm employing. And my hope is that sooner rather than later, the stock progresses upward towards my cost basis, which will, again, allow me to collect more premium. And if I'm able to get above the cost basis of the stock, then I can sell the stock. That will free up a lot of capital, giving me the freedom to do more strategies and therefore collect more, even more premium. So that's where I stand right now. And that's the same situation. If you've been watching my videos, you know that I also have been trading the weekly wheel on Palantir and Amazon. And it's essentially the same situation with those, where I'm having to sell longer dated calls in order to be able to collect enough premium. And it's taking longer for those to close out with a profit, which is why I'm not able to report as many profits each week as I had been previously. Okay, so again, I had a total of 5 trades in the weekly wheel. One was a small mistake where I had an entry error, closed it out immediately. Yeah, this one actually I was in for 6 days, but when I entered the good to cancel order for 50% profit, it didn't have the 50% profit, and I ended up closing it out at the market price, which resulted in a small loss. So, but at the end of the day, 5 trades for a total profit of $468.12. All right, so now let's get into the zero DTE trades that I've started experimenting with. And if you watched last week's video, you know that I did an iron butterfly. It was a one-day strategy and a one trade that I did on one day, and it ended up being profitable. I think I made $468 or something along those lines. But what I have been experimenting with over the last week is what is referred to as a multiple entry iron condor. So essentially we're doing multiple entries of an iron condor throughout the day. And let me just back up and explain what a zero DTE trade is for those of you that don't know. Those are trades, options trades, where you're opening the trade on the same day that it expires. That's why it's called zero DTE. So you go into your trading platform and you find the trade or the option chain that expires today. It'll show zero for the duration of the trade. And then you enter a trade on that, and whatever happens that day is what happens that day. You don't really have any time to make any adjustments or do really much of anything. It's either you make a profit or you make a loss. So what I'm doing with that zero DTE strategy is what is referred to as a multiple entry iron condor. And what you can see here on your screen is the profit and loss diagram for an iron condor. And basically what an iron condor is, for those of you that aren't familiar with the term, it's basically taking two credit spreads where you sell a call that is out of the money, and then you buy another call that's a little bit further out of the money, and this creates what we refer to as a spread, and this defines your risk, meaning that you can only lose so much money. You can only lose the width of that spread. That is your max loss for that spread. But an iron condor is where you're doing two spreads. You're doing a spread on the call side and you're doing a spread on the put side, and this is basically creating a zone of profit where you can make money as long as the underlying stays within that price zone. If it stays between your two short strikes, then you're going to make your max profit. If it ends up going below your short strike, then you start entering a zone of reduced profits until you hit a loss zone, which is capped at a certain amount. So again, this is referred to as a defined risk strategy because you're only risking a certain amount. It's not undefined, it's not unlimited risk, it's not an unlimited loss. Your max loss on this particular position here is $790. You cannot lose more than that. And your max credit or your max profit is $4,210. Okay, so that's what an iron condor is. And so a zero DTE iron condor is doing this on the day of expiration. A multiple entry iron condor is doing this multiple times throughout the day, on the day of expiration. And we're doing the strategy on the SPX. The SPX is one of the broadest indexes that you can trade, which gives it inherent diversification. You're not investing in one underlying like Apple or Google or Amazon. You're investing in a broad index of stocks, 500 stocks. It tracks the S&P 500. And so that in and of itself gives it diversification. If you're doing this in Apple and Apple has a bad news report come out, then you're going to be affected by that. Whereas even though Apple is one of the stocks that is tracked in the S&P 500, you're not going to be as affected by Apple. I mean, you might be if it's a big enough negative news story or even a positive news story. It could move the S&P 500 or the SPX, but it's not going to move it at the same magnitude that it would affect Apple. And another aspect of the SPX is that it is highly liquid. It is one of the most popular trading instruments on the exchanges, and there are thousands upon thousands of investors, retail investors, and institutional investors that are trading the SPX. So there's a lot of liquidity, which means your bid-ask spread is going to be tight, which means you don't have to worry about slippage as much with trading the SPX. And finally, the SPX is only an index, meaning that it is not directly tradable. You can trade futures and options on it, but you cannot buy SPX directly. So what does that mean at expiration? What happens? Well, you're not going to get assigned the stock. You're not going to get assigned SPX. Essentially, it's called a cash settled index, meaning that at expiration, you'll just settle out cash. So if you're in a loss position, whatever that loss, the amount of that loss is, will be deducted from your account. And if your position ends up expiring worthless, then you get to keep whatever premium you collected for that particular trade. All right, so this illustrates how I enter this trade. Basically, I'm entering multiple iron condor trades throughout the day, and here are the times that I'm currently using. And this can change over time depending on the dynamics of the market. We may find that as the market shifts and it ebbs and flows like it always does, we might want to change these times. But right now, my first trade goes on at 12:30, and the reason why I'm waiting until 12:30 is that it gives time for the overnight news to be either the news over the weekend or the news overnight to be factored in and absorbed and digested by the markets. Typically, you'll see a lot of traders that avoid trading at market open just because there are some wild swings that can happen within the first 30 minutes to an hour. So essentially, I'm waiting until 12:30 to let all of that factor and flow through the markets, get absorbed into the markets, and typically around this time frame, the markets tend to settle out a little bit, and that's what I'm looking for. So I do my first trade at 12:30, and then every 30 minutes after that at 1 o'clock, 1:30, 2 o'clock, 2:30, and then the final trade at 2:45. Going beyond 2:45, there is a gamma risk where options pricing moves very fast because of gamma. Gamma is one of the Greeks within the Black-Scholes formula that determines how options are priced. It's a little bit beyond the scope of this video, but that's essentially the reason why we stop at 2:45. And so essentially, at each one of these times, I'm entering an iron condor. And essentially, again, remember, an iron condor is two spreads. You have a call spread and a put spread. And I do enter those one at a time, depending on which way the market is moving. So if the market is moving up, I put on a put spread because it's benefiting a put spread. If the market is moving down, I'll put on the call spread. And then I may wait a little bit before I put on the other side. I then enter a stop loss at 2 times the credit received. So let's say, for example, if I received a credit of $1.50, I will put on a stop loss of $3. And then I just keep doing that throughout the day. If the market stays within the expected range, then all of those iron condors or all of those spreads will expire worthless, and I'll be able to keep all of the premium that I collected. If the market moves outside of the expected range, then I will probably get stopped out of one side of the other. And if I get stopped out on one side of an iron condor, then that trade at best is going to be break even if I collected the same premium for both sides, which is my goal. If I get stopped out on both sides, then I'm going to be max loss on that one particular iron condor. But remember, I'm doing 5 or a total of 6 of these throughout the day. So I still have opportunity to make money on other iron condors. And hopefully, if I do get stopped out, I only get stopped out on the one side so that it's just a break even for that one iron condor. So let's take a look at my possible outcomes, assuming that when I put on these trades, I don't have any slippage with my stop losses if I do get stopped out. So slippage, essentially what that is let's say, for example, use my previous example, my previous numbers. If I collect $1.50 on one of the spreads, and then I put in a stop loss of $3 for that spread, and then my stop loss gets hit, sometimes what can happen is that the market can move so fast that it blows through your stop, and rather than getting closed out at $3, you might get closed out at $3.20 or $3.40. And so the difference between your stop and the actual price that you sold or bought back your position is the amount of slippage. So you're taking more of a loss than what you planned for or what you expected. Slippage does happen. There's a lot of information out there about the different brokerages. There's information about how to minimize your loss or your amount of slippage. For example, is your brokerage holding the stops at the brokerage, or do they send the stops to the exchange? Optimally, we want the stops to be at the exchange, but again, that's going a little too deep into this the scope of this video, so I'll save that for a later video. But I want to go over my possible outcomes for this strategy, assuming that I'm not taking any slippage on these trades. And this does not factor in commissions or fees either, so keep that in mind. So first of all, max loss. Now, of course, I could have max loss. What will happen is that I'm getting stopped out. In order for me to experience max loss, I have to get stopped out on both sides of all of my trades. So all 6 iron condors, I'm getting stopped out on the call side and the put side. So now, if that does happen, and I'm assuming here that I'm collecting about $1.70 on each spread, so a total of $3.40 on each iron condor, which I think is about average for each spread or each iron condor. Sometimes it's a little bit more, sometimes it's a little bit less. And also assuming just one contract on each trade. So in this situation, if I did take a max loss and all of my stops were stopped out, I would take a loss of $2,040 for the day. I could break even, and in order to break even, I would have to be stopped out on one side of all trades, or, so essentially, let's say, for example, we're doing these iron condors throughout the day, and we've got calls and puts, and the market is just shooting up outside of the expected range throughout the whole time we have these trades on. So we're getting stopped out on all of our calls, our call spreads. That would put us in a position, because all of our calls are getting stopped out. All of our puts are expiring, allowing us to keep all the premium for all of our puts. That would put us in a break-even position. Or another scenario that could cause us to break even is if we're stopped out on both sides of half of the trades. So that would be a scenario where, like, let's say maybe between 2 and 3 o'clock, there was some kind of event that caused the market to move dramatically in both directions, and that stopped us out on both sides. That could cause us to break even if it's just half of, so 3 of the 6 iron condors we got stopped out. The other 3 expired and we were able to keep all of the premium. Or we could have any combination where we are getting stopped out for half of the premium and we're getting half of the premium that is expiring worthless and getting to keep all of that premium. So of course, in that situation, we're not making any money. We're just breaking even for that day. And then the opposite side of the max loss, of course, is the max gain. And that's when we put on all 6 iron condors and all 6 iron condors expire worthless. And in that situation, we would make $2,040 for that day. Now, of course, I could have anything in between. For example, if I had 4 out of the 6 iron condors expire worthless, I'll show a profit of $680 for the day. And then conversely, if 4 out of the 6 iron condors get stopped out, I'll show a loss of $680. And of course, these amounts aren't going to be exact. They're going to vary somewhat depending on how the market is moving on that particular day. But the bottom line with this strategy is if the market trades within the expected range throughout the day, we'll show a max profit. If the market moves outside that expected range during the day, then we're going to show something less than the max profit. And that just depends on how often it moved outside the range. It could be slightly less than the max profit, or it could be the max loss and anything in between. The idea here is to give the strategy multiple chances to be successful. Some zero DTE traders will open a position at the beginning of the day and either let it go until the end of the day, or maybe they'll put in a market order to close at a 25 or 35% profit and then just leave it at that. This strategy provides multiple chances of success. So if the market makes a big move during part of the day but settles out for the rest of the day, there's still an opportunity to book profits. Now, I don't trade this strategy on FOMC announcement days or FOMC minutes, days where they're releasing their minutes, because when the Fed talks, that typically will have a pretty big impact on the overall market. So I just want to avoid that altogether. Now, I'll say I'm optimistic about this strategy. Obviously, I am. I wouldn't be putting this amount of time or attention into it, experimenting with it, if I wasn't optimistic about it. And I do believe it can work over time. The disadvantages of this strategy, I will say, is that it takes time and attention. You pretty much have to be at your computer for the 3 hours or so that you're executing these trades and managing these trades, plus the time that it takes to record the trades and analyze them. It could also take an emotional toll. Sometimes these things happen fast. Things can be going your way, but then the market can take a turn, and the next thing you know, you just had a bunch of trades get stopped out. Now, I will say that one major advantage is that there are platforms out there that will automate these trades. They'll execute these trades automatically. All you have to do is enter the parameters that you want to execute throughout the day, and it will execute them based on the parameters that you enter. So if we can find that this strategy is successful over the long term, then it's something that we can automate and not have to spend so much time sitting at the computer. Of course, we always have that option. If we want to do it manually, we can. If we want to automate it, we can. One thing to realize about this strategy is that unlike some of the other strategies that I trade, it does not have a high win rate. The win rate might be slightly over 50%. It might be slightly under 50%. But that's, again, where you have to have some fortitude, and you have to be able to go through some drawdowns, and you have to be able to see some red and take some losses and realize that over the long haul, it's a numbers game, and over the long haul, you have to have faith that you will have profits and you will realize profits. So it is definitely a mental shift from other types of strategies that have high win rates. So I've decided that I'm going to continue trading small with it. It takes me a while for me to completely wrap my brain around a new strategy, and then I have to get a feel for it, and that's what I'm currently going through right now. I'm continuing to wrap my brain around this strategy, and I'm continuing to get a feel for the dynamics of the strategy and how it works in relation to how the market moves. And so I'm just going to continue to monitor the performance closely and look for trends. If I see trends that I think I can tweak to improve the performance, make it more successful, then I may tweak it in an effort to take advantage of that trend. Now, I will say that there are more considerations that need to be taken into account when putting on this strategy, but I don't want to get into those right now. I will get into that more later if I do find that I'm having success with this strategy. But for right now, I'm really kind of in the testing and experimentation phase, so I really don't want to get into that so much right now. But if you want to see how I'm progressing with this strategy and these trades, then make sure you subscribe and stay tuned because I will be releasing my results in later videos. So now I'm back into my trading or my tracking platform, TraderSync, and I have the results pulled up for my 0 DTE trades that I did last week. And as you can see here, I am showing a loss for that. I have a loss of $1,690.45. So yes, it is a loss, but I mean, I think again, we have to take in consideration that this is a new strategy for me. I've made some mistakes, and I'm still getting a feel for it. I'm still wrapping my brain around it, and it's a lower win rate. I mean, we have to expect on this type of strategy that we will take losses for some time, and we will have to be patient. So I'm giving it more time. Yes, I'm showing a loss for last week, but I'm still optimistic that this will be a profitable and a worthwhile effort over time. So again, stick with me to see how that works out over time. Oh, another thing I did want to say is that I don't really have TraderSync set up to track these trades individually. So the results that you're seeing on the screen is pretty much just an aggregate result for, I do import the trades into the platform, but I haven't gone in and individually tagged each trade to be able to show each trade individually. It's pretty time consuming to do that. I didn't really have the tag set up. I am working on that, and depending on the amount of time and effort it takes to do that, I may or may not do that. But hopefully in next week's video, I'll be able to use those tags to show you a little bit more insight about how these trades panned out over time. Right now, I'm just using a separate spreadsheet to track my trades, to track my strike prices, my entries, my stops that I've entered, and to be able to kind of track my progress throughout the day. I'm not using TraderSync for that because it's just not set up for that. But it is nice to be able to use TraderSync to track these over time so that 6 months from now I can take a look back and see that, okay, yeah, in April or May I was successful with these with that strategy, but in June or July maybe not so much. You know, just kind of track the trends over time. All right, so that's it. That's all of the strategies I have for this week. It was just the weekly wheel and the 0 DTE. So let's take a look at my totals for the week, and all I have to do is come into my week closed and select all of the weeks closed, and that will give me my totals for the year so far, which is, it's still loading up here. Oh, I got to get rid of my 0 DTE as well so I can see all of my strategies. And so here we go. We got our total of $60,881.49. Our average weekly income for week 16 was $3,615.17. Our average for this week has gone down a bit to $3,382.28. But again, we've got a new strategy in there, and the loss that I experienced for last week was mainly due to that. So let's go ahead and go back to my reports to see how my graph looks. Yeah, a little bit of a, we got a little bit of, yeah, obviously we have a sharper incline at the beginning, first few months of the year, and then things have flattened out, declined a little bit here over the last couple of months. But I am optimistic that we will get back on track. Let's go ahead and take a look at our week closed now. All right, so we are showing one more loss on here, but we got to keep things in perspective. We got a new strategy on board, and I'm hopeful over the next week or two we're going to start showing some nice profits with that. And if the market continues to recover and continues to flatten out, then I'll be able to have more buying power available, and I'll be able to do more of my weekly wheel, get back to the weekly wheel trades and book some more profits with that. So, you know, this is a market where we have to be patient. The options trading is great, and you can book consistent income with options trading, But it's not perfect. It's not a way of making money all of the time, every time. And if anybody says that you can always win with options, then I would be very skeptical with anything else that person has to say, because that's simply not true. There are some strategies that have very, very high win rates that I've been able to show you in the past, but even those are going to show a loss at some point in time. Eventually, they will show a loss. So we're really just trying to put the odds in our favor. We know that we're going to have losses, but we want to make sure we're putting ourselves in a position where our profits outweigh our losses. And over time, over the long run, we're able to book profits that are above what you could earn with any other type of trading or investing. All right, so that brings us to another close. I would like to thank you for stopping by and checking it out. And if you have any questions or comments on any of the content that I provided today, then please drop them in the comment section below. I would love to hear from you. Are you an options trader? If so, what type of strategies are you trading? Where are you seeing success? How did the big sell-off in the market affect you and your options trading? If you're new to options trading, stop by, drop a comment below, and just say hi. I'd love to hear from you again. But thanks again for stopping by and checking it out. Make sure, if you like this content, to like, subscribe, and hit that bell notification. And until next time, I look forward to bringing you more better options in the future. Bye-bye.